Hi guys, welcome back. In today's video, we will be talking a bit more about the market crash. This video is not a financial advice, it is just for educational and entertainment purpose, so please do your own research. Without further ado, let's get into it. So, is the market crashing? Well, let's find out. So, in a wealthy resort town of Jackson Hole, Wyoming, around 120 central bankers, economists, journalists, they met last week to discuss the monetary policy. The attendees of these events came from New Zealand, England, France, South America, and Japan. And on the agenda, a coordinated global effort to bring down inflation and finally restore price stability was the situation. So, US Federal Reserve Chair Jeremy Powell got the ball rolling with a carefully choreographed 8-minute speech on Friday morning. By the afternoon, the value of the entire global stock market was collectively down by trillions of dollars, and the S&P ended the day down roughly by 3.4%. By the time we are filming this video, the stock looks set to extend the sell-off today as well. So if you're watching this, you might be wondering what the heck happened in Wyoming on Friday that caused the stocks to melt down. So for now, the recent messaging that Fed made on inflation has been quite consistent, but since the June, the financial markets have increasingly placed bets on flimsy evidence that the Fed will pivot and cut rates if the stock or housing markets will fall. But Powell hammered home the point on Friday that there would be no such situation, causing the entire stock market to plunge. Basically, he said that the 2.5% was a neutral rate that would neither slow the economy down nor speed it up, and the stock market responded by skyrocketing. 2.5% in the long run with a 2% inflation is actually a neutral rate, but with inflation running at about 5% per year, 2.5% is not an appropriate rate of interest to slow the inflation. Powell also appreciated the mistakes of 1970 where the rates were cut and inflation started increasing. And in addition to this, he appeared to take responsibility for the mistake of his earlier tenure and seemed willing to take necessary steps to fix them. Powell and others implied that the interest rate need to stay higher for a couple of years, not the 3 to 6 months that Bull had pinned their hopes on. This busted traders' hope for a quick reassumption of QE and rate cuts in 2023. When it comes to cash rates of 4% or higher are likely needed. Powell clarified the kind of rates would likely be needed for various, Fed chair comments after Powell. Millions of people, business like this acting in their self-interest would end up causing damage to the broader economy. Millions of people and businesses who will be acting in their self-interest would cause more damage to the economy. When you model the welfare cost of inflation, which was academic increase when the inflation ran at 2% annually or less, but now it's like a real-life science experiment. There is a clear and convincing evidence that current inflation was mainly driven by demand. Supply chain problems magnified the impact, but the economy was always going to break at its weakest point when flooded with money, whether those points were port infrastructure, trucking, semiconductors. So everybody out there would try to blame supply chains, but when you look at the data for ports, they handle much more traffic in 2021 than they did in previous years. Basically, what this means is that you can put your money in treasury bills and earn 3% annually until the end of year and then 4% per year risk-free, or you can put your money in stocks which have returned 9% or so over the long run. But if you time it wrong, you can lose 50% or more of your money over a few years. If you turn to crypto market and if you take a look at the price, you can see that the price has fallen quite significantly over the last winter. So that's really significant. In fact, Bitcoin has also fallen below $20,000 several times in recent weeks, which is a price point that is very important that it stays stable so that we can predict what's going to happen in future. When it comes to Ethereum, it also has similar fate. So if you can see right now that Ethereum has been falling quite significantly, it has received 50% decrease from the current price. So this looks like a situation of a fully blown bear market, not just a bear cycle. And just because we see a little bit of positive price action doesn't mean that we are out of it. Currently, Ethereum is trading at 1628 US dollars. There are a lot of experts out there who are saying that crypto winter is already settling in because there's a lot of layoffs that's happening, there's liquidity crisis, but experts would predict that crypto prices will stay low for the future, as such as they did between early 2018 to mid 2020. Additionally, a lot of crypto companies have laid off their staff, they have frozen withdrawals, and they have tried to mitigate losses and raising questions about the health of the industry. So in order to prepare for inflation and this market crash, it is very important that you try to prioritize your budget, your debt, and your savings. So before investing any money in crypto, make sure you feel confident about your budget, you have a solid emergency fund ready to go, and follow the golden rule, and that is to invest only what you are okay losing. It's also a good idea that you try to diversify your investments because that would reduce the overall risk that is involved in the cryptocurrency market. Overall, there are significant macro and micro factors that are affecting the entire stock market, the inflation, and also the cryptocurrency market. Nobody knows the future. However, it is very important to stay up to trends and to ensure that you diversify your investments and invest only what you would be okay losing. I hope you guys enjoyed this video, found it helpful. Please don't forget to hit the like, comment, and subscribe, and I shall see you guys in my next one. Till then, take care. Bye now.